Let's just start with the S&P 500, and I'm going to take a look. I mean, you can take a look at the SPYs, right? This is the S&P 500 ETF. It's got obviously exactly the same structure. Let's take a look at SPX. So this is the index, the S&P 500 index. So the count that we've had was as a WXY of the lows through this ABCX, ABC. So nothing really impulsive out of here. And that's why for me, a move lower to new lows would be maybe a little bit surprising, because this would have to be taken as an X wave. And then you're getting another ABC lower, which doesn't have to be as deep as this one was. It could be a very simple AB with another C just below 36.24, and you could be done with it, right? But it's very hard to kind of open up a super bearish count by the way this structure looks from this high to this low, from 48.18 to 36.20. So with that in mind, let's just assume that, let's say this was a pretty decent correction, and now we're rallying higher. And this is kind of what we're facing. We're facing an impulse of the lows in what we're thinking of wave 1, and then we're facing a wave 2, and now we were looking for a wave 3, which will look pretty pleased all the way up here into these levels. And we talked about this as this was happening, that we're approaching the 200, that there are some resistance levels at the top of this B wave. There's a band of resistance coming up. So just kind of with the caution that we've talked about as the market was approaching these levels. What I did not expect, however, was such a deep sell-off after we hit these levels. So what this does throw a little bit of a cold water in this count. Now on the futures market, and that sometimes happens, you get this overlap between 4 and 1, and that happened in the futures. But actually, let me see it right here. I think I've got it, and maybe we can see it more clearly. I gotta connect to FXCM really quickly and then switch to my count in here. I just want to see if we penetrated the top of the wave 1, because I think we did, and that's kind of what I'm what I'm looking for over there. Let me see. Yes, you can see. Well, no, actually we didn't. Oh no, we didn't. We didn't in the S&P 500. We've done it in the Nasdaq, right? Like if you see my line in here, there was just a little bit of a dip below right there in the Nasdaq, but it did not happen on the S&P. So this is the S&P futures, SPX 500 that I have, and I can even get a line. Yeah, we didn't go there, 39.47. So let me just go back to the cash market. So, okay, we're going to have an invalidation of this count if we're coming below this wave 1. Now, I know, in rare instances, you can get triangles to kind of come back in here and overtake the top of the wave 1 briefly and then fall sideways. And the way that would look, it's sorry, what am I doing here? It's like this. See, I was looking for my marker, which I don't seem to have it when I'm counting it. So that's kind of what I'm, this is kind of what you can possibly get as a triangle. Even as the markets are approaching the top of the wave 1, and remember, people are looking very directionally right now. Oh my God, it's a big sell-off. We're going to crash to new lows. We were very bullish in here, going to new highs and to new all-time highs. And then the market says, we're coming back down. Now, think about this. What if you're going back up here in 3 waves, right? Everybody's going to go, oh my goodness, the bull market is over. I mean, this kind of bear correction is going to go to new highs, and then you fall back again. And that's a very fair assumption. Because here, you're going to go up here, and I'm just going to put a time fib in here. Just going to go time analysis 4v2. Okay. So here you are. Let me find it here. Okay. So you got to get, and this was a pretty sharp correction, right? So even if you're moving twice in the 4th wave in distance, what wave 2 moved, you can still have enough room to kind of complete a triangle. Even if you do a 2-6-1-8, this would not look bad as a 4th wave. Okay, just kind of looking at it like that. Just pull this lower. So you can see, I mean, this is not impossible. And you can go into the 38%, you can go into the 23% if you want to go towards the apex of the triangle in there. So in situations like this, you're allowed, and you can do a brief penetration of this and then go back, but close obviously above the wave 1 top. So that's one of the things that kind of happen in triangles. And this move in here looks like a three-wave move. So I'm pretty much watching this. And you can see, I mean, look at the, and this was something that I try to avoid, but here, I mean, you know, pretty much textbook head and shoulder correction from this neckline, pending a few, maybe a few, you know, a few points in the S&P 500, but nice move in here, kind of corrective. So that's kind of what I'm betting. Let's see if we're able to. Now, if this market does, and as you know, right, if it does, let's say 1, 2, 3, you're building a fourth here, and then you're doing a 5, and you're crashing lower like that, now things start to look a little bit ugly, because you're going to get a pullback back towards the, you know, and right now, I mean, we still haven't violated this trend line just yet, right? This kind of baseline that I have on here. But, you know, if you're breaking below this, then you're going to go back and retest that. I want to go to some below. You're going to go back and retest it, you know, somehow in 3 waves. And then, you know, then there is the chance of a bigger crash lower from there like that. So these are the 2 scenarios that I'm running right now. I'm sorry, I'm just going to get a sip of coffee. I like to drink coffee when I do these videos. So, right, 1, 2, 3, 4, and 5. Obviously, this third wave is pretty equal. Like, so let's just measure this right now. It's a little bit longer. Let's say if that was a wave 2 and this was a wave 3. You know, we go just a little bit more than that. But you know, you can get a 4 and then maybe another small 5th wave. It doesn't have to come that deep. But anyway. So that's the scenario, 1, 2, 3, 4, 5, and then you're going to get a 3-wave pullback, and then you crash low. So this is the one that's more scary, because that can tell you, okay, fine, this was an X wave, and you're actually beginning a larger, let's say, you know, it could be a very simple ABC in here, right? And this is all you're going to get. This is going to be pushed down, and sorry for spending some time about, you know, on this, but it's, I think it's important. So you go A wave here, then you go a B wave here. Right, and then you go, I'm just talking hypothetically, and then you go a C wave there. And obviously I have to change the degree to this kind of minor, but it's this can complete, and this could be the X wave, right there. I'm going to make this in red. So WXY, X, 1, 2, 3, 4, 5 for A, up in B, down in C. And this can actually complete just below this 3624. You can complete the move and then push back up higher. Now, if this does not happen and instead you're getting this in a triangle, that means that you're going to start to do ABC for wave A of a triangle. And I'm going to pull the triangle in here. So you're going to go A, B, C, D, and E. It can be there, or maybe just a little bit lower, something like that. So and that's how that can look, you know, just kind of something like that. And that's actually, it's not a you know, it's kind of not a bad idea, not a kind of bad looking. And then from there you can start to push higher in this 5th, and then, you know, you're creating, let's say, a 5th wave. Then you get a 3-wave setback back towards here. You know, you're going to come like that in 3 waves one more time. And because by the time you're breaking, you're going to be violating the trend line that comes from the highs, and that trend line is right here. See how we're doing some of this stuff. I mean, it's technical analysis, but I think it's pretty cool, right? You're going to go WXY for a wave 2, then 1, 2, 3, triangle in 4, up in 5. You finish the first sequence. You're getting ready to make new all-time highs to go higher in this 5th wave, but then you need to do the setback in 3 waves. And how convenient that setback, you know, can actually happen in 3 waves back to retesting of the trend line once you break it, and then the new rally begins in that larger 3rd wave, and which can be maybe next year. So you know, I know there's a lot of hypothetical here, and you know, there's probably some other stuff that I'm not necessarily thinking about, but these 2 scenarios are the one that I kind of they're in my mind right at the moment. You know, in looking at the S&P 500 and analyzing the price structure in here. So that's kind of what I'm seeing. So now we're going to wait and see what happens into tomorrow. I know we're going to have some data coming in, and we have the job reports on Friday, and that's going to be, some more volatility. It's the end of the month. Tomorrow is the last day. And, there might be some flows in here and some crazy stuff happening, but it's not like it hasn't happened already. Plus, remember this, there was probably less liquidity in this market in the month of August. I heard commentaries about that, and this happens every year when traders and these big guys are kind of gone. So there's not a lot of things, and any sell-offs and any big orders here can exaggerate the moves. Right, so we'll see what happens when they come back and kind of which direction things are going to go. One thing that's interesting, and I'm going to kind of spend another couple of seconds here, is this longer-term chart. Right, that's the 200 week, and then there's the 200 day. That's where we've been rejected after a pretty decent. This is a 2-week chart, so we've had 1, 2, 3, 8 weeks, couple of months of decent bullish price action. So June 18, June 16, whenever this low was, and then up to August 20th or something like that. So here we are, coming back and retesting the 50-day moving average, which points higher. We've done just a minimal close below it, right, which is a little bit of a scary signal for a lot of people, because if it drops back in here, we'll see what happens tomorrow, and if they're able to squeeze this back up higher. Now on the monthly charts where we're going to close tomorrow, this is kind of how that looks, that candle, right? It's not very pretty the way this looks with that rejection, but also I would not dismiss this bullish engulfing out of here. Okay, this is a big one. So, you might not call it fully engulfing. Maybe it's a big piercing, but look at this one as well. This one, what I did like is that it actually had a continuation. It almost had like a confirmation. This one did not, and it had a rejection. So that's a little bit of a problem. But let's see what happens into tomorrow and how they're able to close this up. However, long-term support, it's a 35.60 into the 200 week. And, then you have the 50-day moving average where we are right now. So, gosh, I wanted to talk a little bit more about some other stuff too, but I kind of got caught up in this discussion into the SP 500, which I think it's important because it kind of, shows also Elliott Wave structures, corrections, impulses, triangles, trend lines, stuff like that. And I think it's also a decent kind of an educational presentation in here, especially if you're just kind of getting the hang of Elliott Wave, or if you want to dive a little bit deeper. But a couple of other things. So the dollar